Hi everyone and welcome to Equity Stories with Inderes. In this video we're going to cover Soltech as an investment together with the CEO Stefan Ölander. Welcome Stefan.
Thank you so much.
How are you doing?
Fine, how are you?
I'm good, thank you. So to kick things off, could you start by provide a brief overview of Soltech?
Well, we're listed on Nasdaq First North in Stockholm since about 8 years. We have 80,000 shareholders. And today we have a mere value of about 1 billion Swedish. In the core, we are a solar energy company, but we also have the idea of, we call it transformational M&A. So we buy roofing, electrical engineering, and facade companies and turn them into also selling solar. And the reason for that is that we saw about 5-6 years ago that a big study in Germany where there were problems with leakage and maybe even some fires on solar roofs. So we thought that to be the best solar company, we should own the competence within roofing and electric engineering, and then we added facade to be the best solar company. So that's why we actually own these 4 different kinds of companies.
Interesting. So if we look at the markets, what is like happening around the markets and what drive the need for your products?
Well, if you look at this week, COP28, I mean, the Earth, our globe is burning. So everything we do has to look at mitigating the global warming. And one of the major possibilities for that is, of course, a green transition. And their solar energy is in the core of that. So everything is pointing towards our kind of business.
Yeah. So it sounds like your markets are growing quite heavily. Are your own markets growing, or is it like some are stable or declining, or what's your view on the market growth?
Well, the growth within solar and batteries and EV chargers and so forth has been fantastic the last years. Of course, we have grown from when I took over 5 years ago, we had a turnover of 50 million Swedish. This year we will reach probably 2.8 billion, so that's 56, maybe up to 3 billion. That's 60 times. So the market is really growing. The last year, this year, it's been a bit more stable, and that's of course due to interest rates and electrical prices and so forth. But in the coming years, it is a stable and extremely growing market in the whole world.
Yeah. So what makes Soltech stand out in the market? And also important, what are your competitive disadvantages?
Well, we stand out, like I said in the beginning of this interview, that we have the competence within solar, batteries, EV, and so forth, and then also roofing, electrical, and facade competences. And that makes us pretty unique. Another thing that's unique is that it's not one management team. We have today 23 daughter companies, 21 in Sweden, 1 in the Netherlands, and 1 in Spain. So it's 23 managements and all of their employees. So the entrepreneurs that really drive the business, that makes us unique. A disadvantage, I can't think of any except that all the major players in the world we play with the same rule deck. So I guess we all have disadvantages, and now it's the macro factors. That's the biggest disadvantage.
Yeah, but let's say if you end up losing market shares in the coming years, what would you say have gone wrong?
Maybe with losing market shares is not the issue. The issue is to get a higher profitability. So we could actually lose market share as long as the profitability goes up. We're not going to lower our prices to get more market share.
Yeah. So you touched a bit upon it before, but let's talk a bit more about the strategy. What like Soltech strategy look like?
Going forward?
Yeah.
Well, we're going to keep the same strategy. A lot of times I get the question, what's your strategy for the coming years? Well, it's the same strategy as last year and the year before. Growing in solar, within the competences that I said, solar, EV chargers, batteries, and so forth, higher and higher tech. That's a really good strategy that we're focusing on. Also to differentiate from the smaller competitors. You have a higher tech level in our services, but also to have the roofing, facade, and electrical engineering, and move on in our 3 countries. We're in Sweden and Spain and the Netherlands, as I said. Maybe in the future we'll go into other countries, but now we're focusing on those 3.
Yeah. So what are the biggest challenges and risks you need to manage to be successful with your strategy? And how much of this is in your hands versus external?
Well, today and in the last years, it's the macroeconomics, of course, with the wars and the interest rate and inflation, so forth. That's it's the hardest thing to tackle, and that's nothing we can do about, of course, except to try to navigate the best we can. Another thing is the possibility to get the capital. Of course, that market is pretty frozen. We have done rights issues in the fall of 2021, 22, taken in 850 million Swedish. We're not doing that now because the share price is too low. So the possibility to get capital is, of course, something that's something that we work with. But if we just keep on focusing on delivering quality and profitability and growth, I think we can attract capital if we want. We're not looking for it now, but if we want, I think we can.
Yeah. And I believe it's in your strategy also to do acquisitions. You have made several acquisitions. Could you elaborate a bit on your acquisition strategy?
Yeah, sure. We've done about 30 acquisitions the last 5 years. We've pulled the brake a little bit the last year. But the strategy is to buy in these 4 different areas of business. And last year we went into 1st of April into the Netherlands and bought 365 Zone, a solar company focused on the business to consumer market. And 3 months later, 1st of July, we bought Renovables in outside of Barcelona. And those 2 companies are actually 2 of our absolutely best. We're really, really happy with those acquisitions. The management teams are really good guys and gals. So we're looking at expanding in those countries as well. So if we buy something larger, it will probably be in, let's say, Spain next time, not Sweden.
Yeah. And you talked a bit about profitability before. What kind of strategy are you working with in terms of growth versus profitability? And how are you looking to create value for your shareholders?
We're only focusing on profitability now, but it's hard to say when we last year had a 57% organic growth, and quarter to quarter we have 80% growth, which this quarter 23 to quarter 3 22, which 40% was organic. So it's hard to say that we're not focusing on growth when we're growing so much, but all we talk about is profitability. Because a couple of years ago it was very popular to be a growth company, and now it's not. Now you have to have black numbers. So that's what we're focusing on, and that's what we have delivered 4 quarters in a row. So it is profitability. And how we create value for our shareholders is, of course, to keep on delivering quality, profitability, and growth. And then, I mean, is there any business line in the world that's more interesting than renewables and solar? I don't think so. So I mean, the value of the share will come back. So I'm the largest shareholder, and I'm not selling. I'm sitting tight and believing that this will be a really good investment for my retirement.
Skin in the game.
Yeah, skin in the game, of course.
Yeah, that's good. All right, but thank you very much for joining us today.
Thank you so much.